is happening, everybody? Happy Monday. I'm Sean McLaughlin. He's Steve Strazza. This is the Flow Show, the new and improved, and dare I say, sexier Flow Show? Steve Strazza? What do you think?
I mean, everything we do here, we try to keep it sexy.
We try to keep it sexy.
But seriously, I think we found something that really works for people. You and I were both surprised. We started doing this a few years back at some of the feedback that we got. And what it usually boiled down to, what people liked about this show, was that we were walking through, step by step, from beginning to end, our thought process of a trade, right? The problem with the Flow Show, the way we used to do it, is that we're limiting ourselves to one universe, one scan. We're probably publishing 6 or 7 scans a week here, and we're running probably 15 to 20 internally. So to limit ourselves to just one of those kind of seems crazy. So I called you this morning. I said, we should rethink this. And what did we decide?
We both agreed that no universe can contain us.
That's it. It's as simple as that, really.
We can't be contained. Strazza cannot be contained. I cannot be contained. We have ideas. We want more ideas. We want the best ideas. And we can't be limiting ourselves to just one list.
Right.
Now, look, the unusual options flow list that we've been pulling from in the past, sometimes it's a great list.
Yep.
But when the bull market comes back, like it might be coming back now, there are better ideas out there. We don't want to be limited. We want to have free range. We're free range chickens, Strazza. We want to be able to move. We want to go where the opportunity is.
And I think it's actually more authentic in a way, right? Because what you do on a day-to-day basis, yeah, you're looking at everything we write, not just one scan. You're looking at all of them and more, right? You could choose, you try to focus on the stuff we do and write about, but you go wherever you want. And that's what I want from this show. Now, we're going to come on here and we're going to talk about a trade idea that we really like, something that we want to put on, and we're going to take it from beginning to end with you guys, from the chart and the setup to the execution and the option strategy. So I think, things are getting better and better over here all the time.
And we should remind people, Strazza, that this show, believe it or not, we're professionals, so sometimes it doesn't look like this, but this show is fully improvised. We come into the show with no idea of what trade we want to put on, what we're going to talk about. Strazza likes to throw curveballs at me, and we go through the process that Strazza and I and the team often go through behind the curtain when we're talking about ideas we want to put on. We're just showing you how this is done. Sometimes it's a wonderful process. Sometimes it's messy. Sometimes we get no idea at all, and we just say, you know what, no trade. That happens.
Right.
We can do that.
So we're going to keep that first time feel to the show, and context, a little background, 2 really, really bullish weeks, right? You've been cautious since the summer, and it's been the right position to take. You've been selling a lot of premium, making a lot of range-bound bets, but
boring as shit, but that's what we got to do.
As JC likes to say, it looks like Santa Claus might be coming to town.
Don't get him started on those dates, though. Don't get him started on those dates.
Sometimes I can't listen, but no, really. So the Santa Claus rally comes in like a month and change, but we are in the best period of the year right now from a seasonal perspective, and he made some great points this morning, on the morning show about how the market rallied during a period where we would expect it to rally based on seasonals. It corrected during a period we would expect it to correct based on seasonals. And now we're having, we've been thrusting for the last 2 weeks. And if you look at the seasonal trends with data going back to 1950, the birth of the S&P 500, there's no better week in every single year than the last 2 weeks. These are the best 2 weeks, or really the best 1 week would have been a week ago when all the thrusts happened. So seasonals continue to just predict the daily price action almost to a T. And how can we not trust them at this point? If they're right, we're going to have some rippers in the year end. So let's talk about let's try and find a nice, directional long bet today.
That's where my head's at, buddy. My last 3 trades this last few days have all been, some might say, aggressively long trades. We could debate that, but it doesn't matter. That's where my head's at. So let's go, Straza. What do you got?
Let's start with the leaders, right? Because that should be where a conversation like this begins. The best stocks, the strongest stocks. Here's XLK. Let me just throw all this out. Boom. Look at the beautiful structure. And this is now large cap tech. And I joke sometimes that we're really just looking at two stocks here. Well, they're two really good stocks. Right? So like 40% of this fund is Microsoft and Apple. But it's a more important point. The point is simply that this chart looks ready to go. These are the best stocks right now, basically pushing back to new all-time highs, right?
This is not something we talk about a lot here at All Star Charts, but I'm going to throw it out there. A little hat tip to our friends at IBD. That looks to me like a classic old cup and handle chart.
Yeah, no, it is. It totally is. So you got the cup with the first arc. Here's your handle. And what's great about this is that tech was the space to be in, right? This was the relative strength off the lows from last year. Mega cap tech, large cap growth. And then we just went straight sideways since the middle of July. So sideways for about 4 months. That's what you want. An uptrend that goes in a straight line higher for too long can't be trusted, right? You want a nice gain, a nice up leg, a nice consolidation, another up leg. And that's exactly what's happening here, right? You could draw this in a number of different ways, but the point is, or the important takeaway is that this thing is resolving right now, right? So after
A quick question, because I think people are wondering, XLK, it's being led by the two biggest stocks, Microsoft and Apple.
Yes.
Does this mean that if we were to buy XLK and we make a bunch of money, does that mean we have to give it back?
No.
Oh,
No,
okay. So it's okay then that it's led by two stocks. Who gives a shit? Who cares?
Those gains.
It's going.
A better criticism, and I get it, right? I get that comment. The better criticism would be, why don't I just buy those two stocks then?
Yeah.
Right?
Yeah.
You don't have to give the gains back, anything that you make at the index level, but a better point to make about that would be, well, you can just buy the best ones. And that's where I think we should go from here. So what's driving this? Well, as you would say, Mr. Softy. All right, that's what comes to mind first. We had a big wick here earlier in the year, so I'm just going to flip it to a line chart. We want to buy charts that look like this, right? Monster base, nice consolidation for the past 3 or 4 months. Just like the last chart, Sean, cup and handle, right? So you got a big advance, a big digestion, and now you'd expect another new advance or new leg higher. The ones that are just leaving the station, I think, are the most appealing from a get long now perspective. So some that come to mind, Broadcom. Wrote about Broadcom Friday. Listen, if this thing pulls back here, right, you got the upper bounds of this range here, and you want to trade the breakouts of these summer correction ranges, right? And the best summer corrections, or the best stocks this year, corrected mostly sideways since the summer. And this is what that would look like. So something like Broadcom, you at this point kind of want to buy weakness, depending on what your time frame is, right? You want to buy back towards the upper bounds or back towards the breakout level.
Well, Straza, what I like about Broadcom, and I actually considered putting this trade on this morning, but I ended up going in a different direction. But what I like about this trade, and you've heard me talking about this over the last couple of weeks, is this looks to me like a hard trade. This looks like a trade like for the very reasons you just said. You might want to wait for a pullback. You might want to get a better entry. Yeah, you might want to, but the hard trade is to chase this thing, and this thing might be setting up for a monster breakout, and that's why it'll pay, because it's a hard trade. The thing that held me back on this, Straza, is again, I love the trade. I love this setup. The implied volatility is a little high for me right now. That was not a reason to not put the trade on, but it was a reason why I decided to go with a different trade that I liked better because it had very low volatility, and I wanted to just buy calls.
But explain what you mean by hard trade, though, Sean. Like,
okay, so
exactly.
It's a hard trade. It's a hard trade. Look, we know about this is going to ruffle some feathers here. All right. and maybe this is the wrong venue. I'm sorry if this upsets you folks, but here's the deal. 90% of active traders lose money. That's it. I'm sorry. It's true. I deal with it. You deal with it. Trading is hard. All
And
right.
this is an options. This is an options show, so I think it's worth pointing out that probably even a worse percentage of options traders lose money. That's even harder.
Perhaps that's debatable. But look, 90% of traders, active traders, over some time frame, eventually lose money. That's just the way it is. Now, knowing that, and knowing that the average person, the average trader, looks at a chart like this and says, "Ooh, I'm going to wait for a pullback. That thing's run
Right.
too hard for me." Well, do you want to be an average trader when the average trader loses 90% of the time? No, you don't. You want to do what the average trader won't do. And when I'm looking at a chart like this, the average trader probably will not get aggressively long right here. They might have back around the 900 level, maybe. They might have like on that green candle day where it would, Friday, where it just broke out, but they didn't want to chase it 20 points up. Well, if this thing goes to 1,500 bucks a share, which it totally could over the next 4 months, do you care if you bought it at 945 or 955 or 965 or 985? No, you don't care.
Yep.
Now, you might have to take some heat with, the price of being aggressive is maybe you're early. Well, as an options trader, we can structure the trade in such a way that we can, withstand a little pullback, right? We could put it trade in such a way that our risk is defined and we can accept that risk up front and know that if we're wrong or we're early, we'll have the staying power to stay with it and let the thing work. And a perfect example of that, I mean, let me just pull up a chart here real quick of, I'm just a little sidebar here. Adobe, this is a trade that we're in. We've been in for a while.
Yep.
Well, during this little sell-off here that ended on, what was that, October 22nd? On this last red day in our All-Star Options private chat room that we have for subscribers, I had a bunch of people hitting me up saying, "Sean, are we getting out of this thing? This thing's getting crushed with the rest of the market." And at the time, our stop loss was 500. And I said, well, we haven't hit our stop loss level yet. The stop loss we've picked for a reason. That's a significant level. And as
Right.
long as it holds above that level, we're going to stick with it. And guys, we were in a defined risk trade, giving us the superpower to wait it out. And look what happened. We're being rewarded. Now, this trade still might roll over and we still might lose. But you know what? I'm feeling a lot better about this trade right now. And I was able to do that because I stuck to the plan. And I was in a position where I could, withstand a little being early or whatever.
I love it. One thing that technicians tend to say a lot, which rings true for this conversation, is that the best uptrends don't retest, right? So the best setups, the best stocks to be in are by definition the toughest ones to get into. And that's how it should be when you really sit back and think about it. But what that means for a chart like we go back to, if we're looking at Broadcom, is that you're not going to get that standard retest, right? That you would think makes sense. You're just going to kind of keep ripping. Uber is the same way. That was the hard trade that we put on last week, right? So you would think, okay, this one should look something like this. And I'll buy it, when we get it right here.
Right.
That doesn't come. What do? Right? So let's talk about something breaking out to new highs. I want to go to semiconductors. I think within tech, within mega cap tech, this is the most interesting place to be. Let me just throw up the index real quick to show why. It's the Philadelphia SOX index. We talk about this corrective action since the summer. One way to do this is just draw a trend line from the peak. Another way to do it is just anchor VWAP, right? And only fish in the ponds that kind of check these boxes, right? That would suggest that the corrective action is now behind us. So something like semiconductors, you could see this clear trend line break. Okay, maybe it's up from here. I'll throw some options at you. It's KLAC 10 core.
Oh, man, that's an old name. I love that name. I
Yep.
traded this thing like crazy in the late 90s.
Yeah, they've been around forever. This is a semiconductor equipment company. Look, it looks just as good or better than most, right? We
That's
talk
a
about those
beautiful
prior
breakout.
cycle highs. We took out the 2021, early 2022 highs. And then, just like Broadcom or Uber or Adobe, we have this consolidation hanging out and occurring above the breakout level. And now we've got one candle, since this resolved. It was a big one from the end of last week, from Friday, but very actionable still here. Another one, just to give you a couple options, and we'll go back to whatever you like. Micron, different, but still incredibly constructive. Not as strong when you zoom out, but a really nice base here. You could drop a anchored VWAP from anywhere. Price is now above it. We have, a textbook base going back to last year that resolved higher into a prolonged range, like a 6-month range. And now we look to be getting an upside resolution from that range. One more, just because we got to give the people what they want. NVIDIA. How can I not mention NVIDIA in the conversation about semiconductors? Listen, if you think, the AI craze is overdone or this or that, or I don't want to chase, hey, there are worse stocks to chase than NVIDIA, first of all. But if you do feel like you're chasing, at least you could define your risk to this, very, very clearly well-defined range. So there you go. You got
range,
NVIDIA, Micron,
that's one
KLA.
problem. One problem is that's a big range.
Too big?
That's That's 100-point range from high to low. That's pretty wide. Not depending on your time frame and what you're doing, it's a little wide. All right, I love every chart that you've shared. I love the one that I liked the most was CLAC. I'm sorry, not CLAC. Was not CLAC. It was MU.
Yeah.
The reason and it's a very simple reason why I like this one the best. Actually, there's a few simple reasons. Number one, if you look at my chart, Gene, if you can pull up my chart if you're not showing it already, look at the bottom of my screen here. I'm tracking implied volatility.
Yes.
Implied volatility is plumbing the lowest levels it has plumbed all year. That means call options here are cheap and easy. Cheap and easy. That's the way I like it, Strats. It's cheap and easy. So that's a big, big positive. Okay. The other thing is, compared to NVIDIA and compared to some of the other tech semiconductor stocks, this name feels like maybe it's due for a catch up, right?
Love
maybe
it.
a little catch up play, get that thing going. And then finally, let's pull up CLAC real quick and let's pull up NVIDIA. Look at that share price, $526 on CLAC. NVIDIA, let's pull up that share price. $900? No, sorry, almost $500. Nothing wrong with, share prices are just share prices. They're just numbers, right? But with MU, it's a what is it? It's a $75 stock.
Yep.
It's a little bit more, it's a little easier for smaller accounts to trade. Look, I know we got some big swingers here that watch our show. Good. Congrats on your large account. But for the rest of us who, maybe trade with a little smaller means or just don't like putting on big risky trades, a smaller price stock allows you a lot more flexibility. Here's the thing too. Not only is it cheaper and you could risk less, but let's say you do have a big account, right? And you see a position like this. Well, you could put a position on where you have multiple contracts on, and that gives you flexibility on how you manage the trade. Now, we're not going to get into all the crazy permutations of how you can manage this trade once it's on, but look, if you're in this, let's say we buy calls here, right? We buy some simple like 75 strike calls. And let's say I buy 10 of them. Well, you know what? If the thing starts going my way, maybe I sell one call when it gets to $78. Maybe I sell one call when it gets to $81. And you kind of manage your position that way. And the cheaper stocks, the cheaper underlying give you more flexibility to kind of, tweak your entries and exits.
And Sean, from my experience too, like you see it in terms of options market liquidity, right? So for me, somebody who's kind of usually using options to put on some sort of kicker where I'm not hedged, I'm not selling anything against anything, right? So what I pay for that premium is what I pay. So the price of the stock will naturally affect that a lot, right? I'm not collecting anything either, usually just going long calls. It's far easier to do that in a lower price stock. So you tend to find like the vehicles that are very popular among options market participants. Micron is one, and I'll just say another one, a really popular one, I think also due to the price of the stock. In the past, it was a lot cheaper, is AMD. So like you tend to like know like Freeport in the commodities market. There's like these go-to options market vehicles that are just being used as leveraged vehicles. And Micron, I think, is one of those for semiconductors.
Yeah. Look, I like Micron, and this is a trade I will definitely consider putting on. And if I bring up the options chain here, I'm probably looking at June options. January too soon. That's only 2 months expiration. I mean, little sidebar. Generally, when I'm putting on a long call trade, when volatility is as cheap as it is, I want to try to go out as far as I can, but I don't want to go too far. And I'm looking at June options. The next expiration after June is January. January is too far. So June,
Oh, yeah, June's plenty.
yeah, June is where I'm thinking. And if you do like a 25 delta strike here, which is generally my sweet spot, that gets you at the 95 strike. You could buy the 95 calls for, let's call it 245.
Sean, how strange is it that the open interest is like depressed in this one?
Depressed?
The open interest is a sixth of what it is in the other strikes around it.
In this particular strike, yeah.
Yeah.
I think it's because they just listed that strike. This is probably a new strike that just got listed.
Got it.
I imagine it'll catch up. But if you don't like, if that makes you, I mean, if you look at the bid ask spread, 241 by 246, it's very comparable to all the rest of them. So, yeah, that just tells me that option strike just got listed. That's fine. But I think buying the 95 calls with 7 months to expiration and paying 245 for them in a name that could really do a catch up rip. I mean, $100. You're showing it on your chart right now. I mean that's the previous cycle high, right? Back in early 2022.
Yeah, so I'm trying to figure out like what are we asking for, right? If we want to get paid on a 95 here. That's not crazy for a semiconductor stock. You got 6 months to move 30%.
Yep. I mean, if this thing moves back to 100, then we're looking at least a double on our invested capital, but probably more depending on how soon that happens and how far it breaks out once it gets above that level.
And that's the target, Sean, right? For these other leading, stronger tech stocks, where are we setting our price objectives? Those old highs. So this is that for Micron. To achieve what its stronger peers are achieving, running back to those old highs, this trade would pay.
Yeah, you're looking at least a double. Conservatively, you're looking at a double if this thing goes to 100. But it could go, depending on how soon that run happens, these calls could triple and quadruple in price pretty quickly.
And we just had a big range resolution. So now is the time. Why do you think implied vol is so low here?
A couple of reasons. One, earnings is out of the way. It looks like it had earnings about a month ago. So that's out of the way. But, we've talked about this in the past with implied volatility. Is implied volatility, all things being equal, tends to mean revert. Whenever it goes up, whenever it spikes, when people are fearful, implied volatility rises. But then implied volatility eventually falls. Why? Because here's the thing about fear, and fear is generally what drives rising implied volatility. Right? People are either afraid of an earnings event or a product announcement or news that just hit the stock, or maybe just the broader stock market is selling off and people are scared. Whatever it is, what drives implied volatility is fear. Okay? But here's the thing about fear, is that whatever it is that people are scared about, all right, either that thing happens and then it's known and it's over and now we're not afraid of it anymore and implied volatility comes down, or that thing that everybody's afraid about that happens and now it becomes the new normal, and that's just the way things are now. And we humans, I mean, at the end of the day, we traders are humans, right? We adapt to whatever the new normal is. This goes far beyond just stock market, right? This goes to, life and living, right? Whatever the new condition is, no matter how terrible that new condition might be, we adapt to it. We learn to operate within the new operating system. And when we do that, once we adapt, we're no longer afraid. It just is. All right. So that's why, not to go on a whole meta discussion here, but that's why volatility mean reverts.
Yeah, right. For a lot of times in markets, it's not about what the answer is, it's about the fact that there is an answer. It's certainty, right?
Right. All right. So look, we're starting to go along here, and I like this trade in MU. I'm going to keep an eye on these June 95 calls. I really do like this trade, Straza. I think that's a really smart way to play this. So that's our trade for today. Now I'm throwing you a wrinkle, Straza, because we improvise this show. And I feel like I have to stand up for myself here a little bit. On the morning show today, you and JC and Spencer were fielding a question from somebody in the audience who said, "You guys don't really talk a whole lot about when you exit your trades. Why don't you talk about exits?" And I put a comment in that you guys responded to. I said, "We exit the trades when they're losers."
Good.
And it may have sounded flippant, and
It's true.
perhaps it was, but guys, it's a really simple algorithm. If you're in a trade, when do you close it? You either close it when it hits your profit target, right? If you have a profit target in mind,
Yep.
great. But the other bigger reason you close it is because it's not working. I read a great book. I've been referencing this book a lot lately. You've probably seen me talk about it on Twitter. It's a book that came out in the last year, I think. It's called Best Loser Wins by Thomas Hogarth. If you haven't read it, Straza, pick it up.
All right.
It's an amazing book, and it talks about the best traders in the world are the best losers. And what he means by that is when a trade's not working, you're out. That's all the signal you need. In fact, you should be flipping it in your head. Any trade you put on, you should assume it's a loser and let the market prove to you that it's a winner. And if the market proves to you that it's a winner, then you hold it. Otherwise, it's out. You're out of it.
Don't hang out too long, I think is kind of what you're saying. Keep your
Right.
losers, really tight. We went around Asia and gave a bunch of presentations, and I had to listen to you give the same important lesson to audiences all over Southeast Asia. What were you saying about winners versus losers?
Well, I was talking about, I was telling the anecdote about my friend Peter Brandt, market wizard Peter Brandt. I'm very fortunate to to call him a friend. He used to live here. He doesn't live here anymore, but he used to live near me here in Colorado. We used to hang out. And one of the first things he taught me when I first met him is he said, "Sean, losers never bothered me. I take small losers all the time. It's part of my plan. I get out when I get out, when my stop is hit. I don't argue with it. I don't complain about it. I expect it." He said, "For me," and he's been trading, Strauss, you know this, he's been trading for like 50 years. He's an old guy now. He's been trading a long time, but he says, "Sean, the hardest trades for me have always been the
Winner.
trades that start winning right away. I put the trade on and boom, the thing just starts going." And he said those are the hardest trades because every bone in my body who has witnessed every past loser that I've had, like every bone in my body wants to take that profit or reduce the risk, or because I'm afraid it's going to roll over on me. And you know what? Many of those do. 70% of those trades roll over on me and I end up, taking a small win or a small loss. But every one of my biggest winners, he said, every one of my biggest gains that have made my year and have made my career, every one of those started working right away. He's like, "So why should I hold anything else than trades that work right away?" That lesson has stuck with me. I wish it stuck with me better because I don't practice what he's preaching as often as I should. But I know this and I'm trying to be better about it, Straza.
Cutting your winners and keeping small losses will keep you in the game and give you more and more opportunities to have those big winners. That is how you win over longer time frames.
Well, Gene is the man behind the curtain here, showing
Great job,
charts
Gene.
and making everything work. Gene, sorry we went long today, buddy, but Straz and I, we're just all bulled up here. We got lots to talk
Excited.
about.
We're excited.
Yeah, yeah.
Fun.
Well, all right, guys. Look, this has been the Flow Show. We'll be back again next week. Thanks for listening to us. I hope you enjoyed the new wrinkle. Not that it's really all that new, but we're just expanding our universe, broadening our topics because, hey, the feedback we're getting from you guys is you want more of this. So we're nothing if not people pleasers, Straza, right?
We aim to please. Yes.
All right, folks. He's Steve Straza. I'm Sean McLaughlin. Follow us on Twitter, @Straza, Options Sean. We'll be back next week. We'll also be back on the morning show tomorrow morning. So see you then. Take care, everybody.
Happy Monday, everybody.